National insurance is a tax just like any other tax. In the United Kingdom, national insurance, when it comes to company directors, there's a different treatment compared to national insurance for other non-directors, other employees of the company. In this week's I Hate Numbers video, I want to outline why that should be the case, why directors are treated differently for national insurance purposes compared to other employees. I'm also going to explain the types of national insurance contributions a director would be liable to and on what. And lastly, I'm going to outline the two methods. Yes, there are two methods available to a company for when it comes to working out the national insurance contributions due for the tax year. As a spoiler alert, by the way, folks, doesn't matter which method you choose, the correct amount of national insurance will still be deducted correctly in total. Let's crack on with the video. Now, first thing, why should the treatment of directors for national insurance be different to other employees? Well, if we take a step back, in the context of running a company, in the context of company law, directors occupy a very special and unique position. Ultimately, they make the decisions for the company. They are responsible for the policies. They are policies responsible for the whole financial makeup of the company, and they bear ultimate responsibility. As a small side note, by the way, folks, when it comes to things like paying out dividends from a company, it's the directors who ultimately make that decision. The fact that the director and the shareholder might be the same people is to some extent an irrelevance here. So company directors have that special position, and in the eyes of HMRC, which is Her Majesty's Revenue Customs, if you don't like acronyms, they can decide how much salary they pay, when they pay that, and if they pay themselves salary or other methods of remuneration as such. And as far as HMRC is concerned, they don't like it when that situation potentially can lead to a minimisation and a reduction of tax, even though it might be perfectly legal. The next thing I want to look at is this is the principle of how national insurance is typically calculated during the course of a year. Now, for most employees, it's very much treated like it would be for any deduction. So what would happen is each year, an individual is entitled to earn a certain amount from salary and bonuses, which is free from national insurance. As a working number, that figure is approximately £12,000 for the year 22-23, which runs between the 6th of April 2022 and the 5th of April 23. Currently, that specific figure, by the way, if you want to check out the show notes, is 11,908. In the year 23-24, by the way, 6th of April 23 to 5th of April 24, yes, we have a very peculiar tax year in the United Kingdom, that figure goes up to 12,570. Now, what that means is, in terms of practical measures, that figure is then sliced up into, say, monthly equivalents. So each month that goes by, £1,000 approximately is how much an employee can earn without having to pay any national insurance. Once they go over that figure, they pay national insurance typically on the excess. And that rate for company directors and employees is 12 percentage points. Now, if their annual salary, by the way, goes over 50,000, 5270, if you want to be precise, then they pay an extra 2% supplement. So in that situation here, an employee earns £2,000 in a month. They don't pay anything on the first 1,000 in national insurance terms. They pay 12% on the excess. Now, the concern with HMRC is that a company director could decide to pay themselves very little in terms of salary and or bonuses in the first few months of the year, and in the final month of the year, they suddenly give themselves a whack, massive amount of pay, maybe, I don't know, £50,000 in that final year, and then there is a cap on national insurance, a minimisation here, and therefore what that would mean is, because they can be manipulative, my word, by the way, in how they pay their salary, nothing is paid for the first 11 months, and there's only a relatively small amount paid in that final month of the year. And HMRC don't like that. Which leads us then neatly into the two methods available to companies and how the national insurance is worked out. Remember, whichever method you adopt, you're still going to end up paying the same amount of national insurance contributions to HMRC. The first one is called the annual earnings method. Now, the principle is this is typically used perhaps where a company director may be receiving an irregular level of salary or bonuses. What would happen? is that the national insurance is only payable when the running total for the year goes over that annual earnings limit, again, approximately £12,000 for 22-23, 12,570 for the year 23-24. So if I was earning, let's say for argument's sake, £2,000 a month as a salary, for the first effectively 6 months of the year, that's going to be £12,000. In that first 6 months, no national insurance would be due. Once I go into month 7 with my salary of £2,000, cumulatively, I'm now over the annual earnings limit of 12,000, and therefore I'd pay national insurance on the excess. And for month 8, 9 and 10, because I'm already over the excess, then what would happen is I'm going to effectively pay national insurance on all my earnings. Now, if it works out, by the way, that it drops, and it's such that in the final few months of the year, okay, it stays at the same level or a lower amount, doesn't make any difference. You're still going to pay national insurance at 12% on the excess because you've already exceeded the annual earnings figure. The other method, before we look at the advantages and disadvantages, is to pay what's called a normal monthly pay situation. So if I'm earning £2,000 in that month, the first 1,000 is free, I pay 12% on that excess. Now, what would happen is, as it goes through, you pay that amount, and in the final month of the year, if you decide to give yourself an extra salary hike, an extra bonus, you look at the cumulative earnings, work out what the national insurance would be due on that 12-month picture, take into account what you've already paid, and if you've under or overpaid, that adjustment is made. Now, what that might mean is you may be due a little bit of a rebate, or you may have to pay a little bit more. So which method is preferred? Now, depending on the level of salary that you've got, you may prefer the annual earnings method because nothing is paid out until those final few months of the year. It also means you have to make less payments to HMRC. So if you do miss a deadline, if for any reason you don't make that national insurance contribution payment on time, when it comes to paying it, it can get really protracted and quite awkward for HMRC to allocate that money to the correct month, and it creates all hosts of problems. So again, that having not to pay anything for the first few months minimises the administration burden. Nowadays, with good systems in place and good accountants, no hints, then that problem is going to be minimised because you've got somebody in your corner. The month-by-month basis here is good because you get into the habit of actually having to pay out national insurance. You get used, you're making those payments. As long as you do them on time, then you don't have to find a larger amount towards the end. Now, folks, just to summarise, you've got national insurance that's due on earnings. Earnings in this case, by the way, are salary and bonuses. We do not include things like dividends. We've got the rates that we've talked about, 12 and 2%. What we will find is that in 23-24, the national insurance limit of 12,570 is the same, by the way, as it is for income tax. That will harmonise things as such. Now, what the optimum salary is not the purpose of this video. That will be covered in a future video. I hope you found this useful. I'd love to hear your thoughts in your comments. What do you think? And if you'd like me to cover a particular topic on I Hate Numbers, the channel that's there to improve your financial awareness, your financial understanding, help you and your business make more money, help you have the business that you aspire to, and improve your planning outlook, then let me know. Until then, folks, I'll see you on the other side.